Recession, just the word feels heavy, right? It's the time when markets crumble, businesses struggle, and panic sets in. But here's the thing that most people miss. Recession is not only crisis, they are incredible opportunities for the smart investors as well. Now think about this. When billions panicked during 2008 financial crisis, the savvy investors were busy building their wealth. Stocks like Amazon were trading at less than $40 per share. Fast forward to today, those who saw opportunity then are sitting on fortunes now. And today I am here to show you exactly how you can do the same. In this video, we are diving deep into the smart investing strategies during recession, from identifying the hidden opportunities to creating your own bulletproof portfolio. So grab a pen, hit the like button, and let us move forward to secure your financial future. And do not forget to subscribe to this channel if you are keen on subjects of business, finance, and economy. Before we move forward, let me give you a glimpse of financial crisis of 2008.
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
Every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
What started in America last year has now spread to every part of the world.
This could be the most serious recession in decades.
Apple's up more than 6% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong.
Did not disappoint. 400 points higher. Yes, indeed. The markets roar higher last 30 minutes of trading as volatility once again rules the day.
Most of the techs this morning, if not all of them, have just exploded.
There's a little known fact. Recessions are like the reset buttons for the economy. Yes, they bring challenges, but they also create massive opportunities for those who know where to look for. Historically, every major recession has been followed by a recovery. And during those recoveries, the people who invested wisely saw incredible results. Post the financial crisis of 2008, the world was hit by another financial crisis in 2020, which was largely triggered by the COVID pandemic. The S&P 500 lost over 30% over a matter of weeks, but within a year, it surged at all-time highs. Investors who stayed the course and made their smart moves saw significant growth. Recessions are not the time to panic, but they are time to prepare. Now let us break down 5 strategies to make your portfolio recession-proof and position you to thrive when the market recovers. The first strategy is focus on defensive stocks. Certain industries like consumer staple, utilities, and healthcare are recession resistant. People will always need medicines, electricity, and basic needs, no matter what the situation of economy is. These stocks tend to perform steadily even during the downturns. Are you currently invested in any of the defensive stocks? Which one are they? And what is the current status of that stock? Do mention in the comments. When talking of defensive funds, think of companies like Johnson & Johnson, Procter & Gamble, Nestle maybe. Stable gains that deliver consistent returns. Your second strategy is diversify your portfolio. Don't put all your eggs in one basket. Spread your investment across sectors, bonds, or even international markets to reduce risk. Diversification is your safety net during the uncertain times. The third strategy that you can keep in mind is look for undervalued assets. Recession often pushes even the great companies' stock prices below their true value. This is your chance to buy high quality assets at a discount. Blue chip stocks and real estate could be excellent options. The fourth element of your strategy could be invest in index funds or ETFs. If picking individual stocks feel overwhelming, index funds and ETFs are your best friends. They provide broad market exposure, are low cost, and have historically delivered solid returns on a long-term basis. Do let me know in comments if you further need to understand what index funds and ETFs are, and I will make a separate video for what index funds and ETFs are and how to go about investing through them. The fifth aspect of your strategy, and a very important one, is to build an emergency fund. Before diving headfirst into investments, ensure that you have 3 to 6 months of expenses in liquid emergency funds. This will protect you from having to sell investments during market dips. Now here's the pro tip, which most of the investors overlook, and this is dividend-paying stocks. These companies do not only provide steady income during the recession period, but also tend to recover faster when the economy stabilizes. Look for companies with a history of maintaining or maybe increasing the dividends even during the downturn. Now let us pause for a second and discuss what not to do during recession. Avoiding these mistakes is just as important as knowing what to invest in. Mistake number 1, panic selling. When market dips, fear kicks in, but selling your investments during a downturn locks in your losses. Stay focused on the long-term picture rather than the short-term panic. Mistake number 2, timing the market. Trying to predict the market's bottom is a fool's game. Even the best of investors cannot time it perfectly. Mistake number 3, ignoring your plan. Stick to your financial goals and avoid emotional decisions. A well thought out strategy will guide you through the storm. Hopefully you would have subscribed to the channel by now. If not, please do consider subscribing to it. Now that you have strategies, do's and don'ts, it's time to take action. Here's a step-by-step plan to get started today. Step number 1, analyze your current portfolio. Identify areas which are overexposed to risk and start rebalancing them. Step number 2, research defensive stocks, ETFs, and undervalued opportunities. Start small if you are unsure. Step number 3 is to build or top up your emergency fund to ensure that you are financially secure. Step number 4 is to set realistic goals and commit to them. Write them down and revisit them regularly. Recessions are inevitable, but they do not have to be devastating for you. With the right mindset and strategies, you can turn these challenging times to opportunities for growth and financial security. So what's your next step? Are you ready to create your investment portfolio which is recession-proof? Let me know in the comments below. If you have found value in this video, do not forget to hit the like button. Share this with someone who needs to hear it. And subscribe for more insights on business, finance and economy. Let's navigate these challenges together and secure your financial future. You may also write to me on my mail ID, which is mentioned in the description. Be inspired, keep building.